So what are the 3 economic wars that I believe Trump is waging right now? I just did a call with my top tier black card group. This is a group of about 1,000 fund managers that all come together. We do a live call once a week that we talk and discuss issues that's going on. This is a call that I did to them. It was a private call, but I wanted to clip and share a piece of it with you, walking through what I believe is the 3 economic fronts that Donald Trump is waging war on around the world. Now, this was recorded April 9th, 2025. So that's the timestamp. More data might come out here in the near future, but hopefully this helps and we can roll the clip. Here we go. The world is on fire. A couple people saying they're depressed. Let me just give you my thoughts. You can go on Twitter. You can hear all sorts of crazy stuff. And I don't want to repeat a ton of the stuff. I want to give you maybe something new that you haven't heard before on maybe economic theory of where this leads. And I'd love to hear from y'all as well. There's 2 different sentiments online, and maybe I like drawing stuff, so I'm just going to pull up my iPad. Sentiment number 1 is the Trump team is stupid. Number 2, the sentiment is Trump is very smart. Okay, if I'm going to just break it down. Now, personally, I think this argument is very weak. The same thing was true with Biden. People kept saying Biden's so stupid. The team is so stupid. Stupid's the wrong word. Okay. They might be misguided. They might be evil, but they're not stupid. These people run the largest economy, the greatest economic power the world has ever seen. These are not idiots. Furthermore, when you look at Trump's team, for example, you can think what you want about Trump, but look at Scott Bessent. Do you guys know Scott? And I'm going to talk about him quite a bit today. Scott Bessent, Treasury Secretary. This guy is known as one of the most successful and I guess you could call him successful and notable hedge fund managers of all time, especially in the macro world. This guy is not stupid. You could believe he's misguided. He's evil, but he's not stupid. Okay. This guy worked with George Soros and Druckenmiller when they broke the Bank of England back in the 90s. Okay. Scott Bessent is not stupid. Okay. all these arguments, I'm like, okay, hold on. Hang on. Howard Lutnick, the Secretary of Commerce. People are, oh, he doesn't know what he's doing. The dude is brilliant. Okay. These are brilliant human beings. They are not stupid. So I think, anyways, I wanted to make sure I set that up here. You can go read. These guys are very, very capable, successful human beings. You can go look at his background and story. I mean, these guys are incredibly capable beings. Now, so I'm going to just discredit this argument right here. They're not stupid. They could be misguided or other things. Now, let's look at a few possible outcomes here. Everyone's been so zigzagged the last few days on tariffs, and rightfully so. We've had a huge market correction, 2-day biggest market crash in the Dow's history. Furthermore, today, have you guys watched the 10-year Treasury and the 30-year? Let me pull this up. So look at this, okay? This is the 10-year Treasury. Let's go to a month here. It hit 3.8 over the weekend. And then now is sitting at 4.43. I mean, that is huge. Now, how bonds work when it's a direct inverse correlation of yield, the yield and the cost of that bond. So for example, if people are selling bonds, the yields go up. If people are buying bonds, the yields go down. So what you can see here is a lot of people were buying bonds. Again, this is just a very simplistic version of this, but we're buying here. And we're like, wow, we're hit 3.8. And then there's this huge sale. I mean, huge sale. This is in bond world, this is a major spike. Okay. Actually, all of this, if you go back to the 6 months, this movement is massive, but look at that move right there. A lot of people think this is China selling all their US treasuries in the last 48 hours, dumping their treasuries completely. Now, we don't know quite yet, but that's the speculation, is China's dumping all their treasuries. Furthermore, if I look at let's see if that takes me to the 30-year. Boom, it took me to the 30-year. Okay, so look at the 30-year. Same thing over the last, let's go last month. Huge spike, 4.8%. So, now, so this causes mortgage rates to move a lot. Again, in the short term, who is selling? Who's the big seller? We had some buyers here, and then who is the major seller of treasuries? As we know, I believe China is the 2nd largest holder of treasuries on the earth. I believe Warren Buffett's number 1, actually. Warren Buffett. So it could be Buffett. Maybe Buffett's selling all of his treasuries. Who knows? But a lot of people, because of the tariffs on China, last night at midnight, 104% tariff hit China last night. And the rest of the world's tariffs hit as well. Now so that's kind of the facts. That's what's going on right now. And now a lot of people looking at this obviously the markets have been all over the place. We'll pull up market moves. I mean, just huge swings. If you guys, sorry, I'm giving you more data here. Monday was a crazy day in the markets. I don't know if you guys were watching Monday. Monday was essentially break even for the day, but the swings, the amount of trading volume was massive. There was a fake tweet that went out Monday that Trump was going to do a 90-day pause on tariffs. You guys see this? The market added $2.5 trillion in 7 minutes off of a fake tweet that went out. And then obviously the White House quickly said, no, that wasn't, and it came from another source. It was a random source. Anyways, they were like, no, we're not pausing tariffs. And then the market quickly erased 2.5 trillion and then went even further down. I mean, there is a lot of movement here on the market. Now, all this being said, it is somewhat mostly manufactured, which is, if you're feeling depressed, some people are feeling depressed. I was feeling depressed and I was like, wait, this is a very manufactured crash. One tweet added $2.5 trillion in 7 minutes. Meaning we are a tweet or two away from total recovery, not total recovery, but a lot of recovery in this market. Okay. That's just a one piece to look at. Now, again, as of today, there's a lot of people calling Jerome Powell, calling out Jerome Powell, saying we need to cut rates to an emergency meeting. I'm sure they're talking right now. I'm sure they're considering what's going on and how it's going to work. So let's now play a little bit of the end game. Where does this lead? Many people online, I believe, are going day to day. What's the day-to-day effect and where is it going to move tomorrow? I want to look a little bit further. So let me go down to my iPad here and I'm going to give you just a few thoughts out of the brain of Bridger. I might be totally wrong, but I think it might be interesting to you. I believe Trump is waging 3 economic wars. Number 1, the first war is obvious, right? This is the war with other countries. Other countries, you have trade deficits, trade imbalance, imports, duties, all that kind of stuff. Furthermore, Trump has said, hey, we want to have an external revenue service and actually make money from tariffs. He actually just said the other day, I think 2 days ago, they said they're getting about $2 billion per day in revenue from the tariffs that just hit. Isn't that crazy? I mean, that would equate to roughly, 700 plus billion a year. That's just the beginning, right? We'll see where this goes. Furthermore, they have said about 70 countries have come to the negotiation table, which is good. And Scott Bessent is going to lead these negotiations right here, the same guy, Scott Bessent. But they haven't struck any deals yet. Many people thought, myself even a little bit included, they would strike deals quickly. Scott Bessent and Trump both said this might go into like June, to really negotiate and get these down. Japan's already come. I mean, a lot of countries have come to really kiss the ring and try to renegotiate. And they are a little going to be slow to negotiate. And now I'm wondering, why are they slow to negotiate? Why are they slow? What are they actually trying to do? What's the bigger game? Because right now, if they could strike a deal with 70 plus countries, relatively no trade, and everything goes back to normal. Why wouldn't you do that? And again, I am under the assumption that they are smart, not stupid. These are smart people. Furthermore, so far, they have done exactly what they've said they're going to do. Everyone's surprised when Trump does what he says he's going to do, right? Like he's like, I'm going to do tariffs. And everyone's like, he's not going to do it. And then he does it. So everyone's surprised, right? He's like, I'm going to do the gold card. I'm going to secure the border. And everyone's surprised when he does it. He has been, love it or hate him, he's a man of his word so far in this category right now with all of his policies. He's been pretty, now not everything's perfect. Not everything's been great, but it's been pretty straightforward. So why wouldn't they negotiate? If you were in their shoes, why would you not negotiate with 70 countries? Because I believe there's 2 more economic wars going on. Let me go to the second one here. So this is number 1. Second economic war that is going on is with Jerome Powell and the Fed. Trump has been pushing heavily on the Fed to cut rates. The last rate meeting, Trump put out a fury of tweets, and I'm sure there's a lot else going on behind the scenes of you need to cut rates now. If we're really going to make America great again, we're going to go MAGA. We're going to really unlock and make this the golden age of America. We need low interest rates. When you think of a 3 or 4 year time period, if you have high interest rates, construction, all the businesses actually we are in, leverage buyouts, IPOs, construction, manufacturing. It's much harder when rates are high. Okay. I believe the Trump team needs the Fed to cut rates faster. We had their last meeting, they said they're going to probably have rates higher for longer. There could be Trump is waging a war internally with the Fed and saying, all right, Jerome, I'm going to tank the markets and I'm going to hold. I'm not going to negotiate. Who wants to move first? I can wait. Can you wait? And he's in an internal battle with Jerome Powell. Inflation has come down a lot of degrees. Jerome Powell sitting there like, this might spike inflation for tariffs, and that's Jerome's stance. But Trump's stance is, if I want to make these 4 years the golden age of America, I need rates lower. So I am going to, you know what? I'm going to tank the market. I'm going to do all this stuff, and we'll see who blinks first. Jerome Powell. That's the second war that he is waging. Okay. So war number one, other countries. War number two, Jerome Powell. There's a third war that I've identified, and there might be more, by the way, but three that at least I can identify here. Third war. This is kind of off of number one, but I think it's unique. This is the war with China. Now, China today, 104% tariff that just hit China today because they retaliated. So China did a retaliatory tariff on Friday. I think up to 80, it put them to 84%. Trump said, fine, if you don't want to negotiate, we'll put you to 104 on Wednesday. Today's Wednesday, they just hit, okay? China then, so let me just walk you through how this goes. We have treasury rates dropping, right? Because China potentially is selling all their treasuries. Now, this could hurt the US in some ways, but also this may be because China needs to prop up the yuan. The yuan has had major, actually, we might want to pull it up here in a second. I'll pull it up in a second. The yuan had a huge drop on March 28th. I mean, one of the biggest drops it's ever had in a day, and then came back up, huge V drag. So they gotta shore up their economy. China's stock market, maybe if someone wants to pull up the chart right now, they dropped 15%, I believe, on Monday, and I think more from them. I mean, China's stock market is selling off like crazy. They actually, in China, they have an internal team, and I forgot the name of the team. They actually go and will buy their own market. They will come in. I mean, we kind of do this sometimes with BlackRock, but they come in and actually buy their own market when it crashes. Their market is crashing like crazy right now, okay? These tariffs hurt them way more than it hurts us, okay? Way more than it hurts us. We are, United States, in a position right now. We are the largest economy in the world. I know China's second, but we are still the largest. Furthermore, we're the largest consumer on earth. Last week, I actually got the direct number. So we consume about 20 trillion a year. China consumes about 6 trillion a year. I mean, we are the consumer economy. We consume 3 to 4 times more than China as far as consumption goes. We import and consume everything. So when we have high tariffs, it drastically affects China. Furthermore, people were asking the question, well, why did Trump do tariffs on these little islands out in the Pacific Ocean, right? There's penguins there, and everyone was laughing about penguins, okay? The reason is because China, if I go to my map here, if you didn't do that, they would use shell companies, and then they would import it to the United States. You have to do a blanket tariff. Otherwise, and currently they estimate, so I think it's around 20% of their trade comes to the U.S. But if you estimate, after the tariffs of the first Trump presidency, they started going to Vietnam, Indonesia, and then to the U.S. to get around tariffs. You have to do a blanket tariff. Again, these people are smart. They are not stupid. Stop saying that's the wrong argument. Could they be evil? Yes, but they're not stupid. These are not stupid people. They're some of the most capable people on planet Earth running the show right now. So furthermore, you have China here, 104%. Now their stock market's crashing, okay? Kevin O'Leary today, actually he made a solid point. He's like, I've done a lot of business in China. He goes, I think you should put tariffs to 400% on China. He goes, they don't play by the rules. They just don't. And they've manipulated their currency against ours. And no president in history has had the gall to stand up to China like this before. They don't play with the World Trade Organization. They don't play fair with the WHO, like the World Health Organization. They just don't play fair. And what we're doing is forcing them to play fair. Now, let me go to the next order. Now, this could be that where does this lead? What's the end game here? Well, this could lead to perhaps, negotiations, right? We negotiate a more fair trade or, deal, whatever, and they're not going to manipulate currency anymore, etc. But there's a different end game here that I think is, in my brain, it feels more probable, but I don't know. Maybe it is just negotiation. China has been a thorn in the side of the United States and it's been this growing threat. They manipulate currency. They steal our intellectual property. They hack our companies. They don't let us. They don't let Facebook, Google, Apple, anybody in there. But their market can come to us. They put up this huge wall, and then they come and steal our intellectual property. Okay, I mean, it is pretty. You could call it unfair. That's what Trump said for years. Hear me out. Again, this is theory. I'm playing end games here. You put Scott Bessent. If you guys remember what I just shared, what did Scott Bessent do in the 90s? Him and Soros and Druckenmiller broke the Bank of England as a hedge fund. It's one of the most notable trades in history is when they broke the Bank of England. And Scott Bessent, Druckenmiller, and Soros were the three guys that did it. Could it be you put Scott Bessent on this job and their goal is to break China? They need us way more than we need them. You put large tariffs, strong negotiation hand here. You tank their stock market. They sell treasuries. They have to prop up their UN. You also perhaps coordinate other means to further squeeze out China. How this would potentially play out. Because they're not going to step down from power, right? So if you're trying to break China, a few things that could happen. First off, you'd have to play again. It's all about staying power. A big thing in negotiation is who can stay longer. Staying power is a huge thing in negotiation. And there's called a deal. Have you ever heard of deal fatigue? Deal fatigue is when you just you've negotiated back so many times, you just get fatigued out and you either back away from a deal or you just cave in. Trump, again, these people are not stupid. I would argue Trump's one of the best negotiators on earth with the strongest hand on earth. He's going to put in deal fatigue into China. Who can stay longer? Whose economy can crash and still be okay? I would argue North America is much stronger than the Chinese economy as a closed circuit in all this. And I believe Trump and Bessent know it. And what they're doing is putting a strong arm on China. And the outcomes here, number one, people lose their jobs. The People's Republic of China is only there because of the people. The people revolt. And you have a full uprising in China. And you call for new leadership and the collapse of the communist government. That's one end game. Okay? That's the full revolt, uprising, and collapse. And then rebuilding of a new world order. I mean, this could be the end game that we were going to. Number two, you have, not as drastic, but maybe Xi gets replaced. And or you have renegotiations to a strong, again, I'm going to call it a new world order, an order of the world that sorry, it's hard to type. I always talk and go too quick. New world order, where you renegotiate and really reset trade. Maybe you move to a Bitcoin standard from Jeff, or you move to other standards, on here with Xi being replaced. Finally, your last order here. Oh man, I'm drawing a blank. We had the revolt. We had Xi. This is the last one. Sorry. I was like, this is the most important one. Generally speaking, you'll laugh in a second when you hear economic wars proceed physical war. This could push China into military action. where they take generally wars don't just start out of nowhere. I mean, occasionally they do, but typically it's an economic war first, then to a physical war. If you look what Trump is doing, when you take this into, it kind of starts to make sense. If you look at this war option down here, what is Trump doing? Hey, I want to onshore all of our energy, chip production. I want to bring everything home, manufacturing. I want lower. I'm, in one sense, he is preparing the United States for war. Now, he might just be preparing the United States for the golden age of America. But in another sense, he wants to increase shipbuilding in the United States. He just 2 days ago, they're going to give $1 trillion to the Pentagon to rebuild our military, to rebuild it. I'm like, why are we, I thought we had already spent a lot on the military. Anyways, they want to rebuild the military. Are they preparing for conflict? If it comes to this scenario, this would potentially push China to military action. My belief, again, I do not know, but we spend on, and so you're like, wow, that's scary. This would be World War III. If China makes military action, this gives us an excuse to go and maybe they want to wage war with China. This would give us an excuse to go and collapse the Chinese government and set again and get rid of this. We don't want to be in a dual world. We want to have, like in Trump's opinion, I'm saying, we want to have one world where the US is dominant. And so if we want to kill our enemies, we're going to starve them. We're going to put Scott Bessent on it. We're going to break their economy. And we're going to see who can stay the longest. And we're going to break your UN. We're going to break your stock market. We're just going to keep increasing tariffs until you break. And either they just revolt and a new government gets put in place, or she renegotiates and we have a more fair trade agreement, or we push you to military action. And we're happy to go to military action because guess what? We spend about $1 trillion per year on our military. And we've done that every year, increase. It's about 980 billion, but it's increased over the last, 30 years. If you take the next 10 largest countries on earth and combine them, it's still smaller than the US military spend per year. And we've done that for what, 20, 30 years? I mean, we are drastically. Now, there's always a secret weapon. There's something that could happen. People play war games, and really, I don't know. Who knows what would actually happen in a military engagement? But if you're confident in your stance, which the U.S. military should be confident with the current data we have, we should be very confident with what we're doing. We just released at least announced a new F-47 jet. We have the B-21 bomber they just released last year. That are these new 6th generation fighters. They probably have a 7th generation. Who knows? It could push China to military action, which perhaps we would be happy with. All right, are we down the rabbit hole enough? Should we come back a little bit? So come back with me. So again, the 3 economic wars that I believe Trump is waging. Number 1, wars with other countries. And this is what he's told us. We want to earn money from tariffs. If we earn enough money from tariffs, we can we can drop taxes. No taxes. How cool would that be? No taxes on people under $150,000. No capital gains. They've already said they're on track to have no capital gains by the end of 2025. I mean, again, everyone's like, Trump's not going to do it. And then he does it and everyone's surprised. I don't know. Trump's been a man of his word pretty much so far in this administration. He's done pretty much everything he said he's going to do. Okay. That's war number 1. War number 2, get rates lower. We need rates lower. Again, staying power. He's going, Jerome Powell, I can wait. Can you wait? Who's going to blink first? We need rates lower from the Fed. And then finally, being tough on China to reestablish this new world order. Perhaps you put Scott Bessent on it. And I think the most likely outcome is right here. She renegotiates. We have a new trade. Perhaps Facebook is now allowed to be in China. We can actually have more free market trade with China. They're not so much of a closed system. These are, I think, very less likely. These are small outliers that there's a strong revolt or uprising or China's military action. But perhaps Scott Bessent is the guy that could break China. Isn't that kind of crazy? This is my brain last night at about midnight. So you guys get a little peek into my brain. All right, let's take some questions, comments here. In the meantime, what happens to all of us? Well, again, I think you think through the medium to long-term effects. Day to day right now, I mean, who knows? I mean, every day has been such a zigzag. Your guess is as good as mine. So I don't know. Some technical traders in here might tell you day to day. Furthermore, I would come back to your business, what you are focusing on. A couple of big, now this is broad. Let's go a little more smaller. Right now, oil has plummeted, which is good for most people in North America. We have oil. Let me pull up the oil. Crude oil right now is trading at $57 a barrel. Very, very cheap oil. I mean, a lot of commodity prices have come down quite a bit. Not everything, but a lot have come down, making it cheaper to travel, to transport goods, to building materials. And some of them come down quite a bit. We have, for example, it might be a good time to refill the strategic oil reserve. By the way, they said they were going to fill it at $70 a barrel or lower. That was during Biden's administration. Right now, it's at 57. Okay, so again, you have some good things in some areas happening in the market right now. The effect is we have cheap oil. However we got there, we right now, I mean, look at this. I mean, that's a huge drop in oil. If I even go to 5 years, look at this 5 year chart. Like look at that. We're right at the end there. Here's 6 months. I mean, that's quite a big dip in just a little short period of time here. So we can let's look at lumber real quick. I'm just curious. Yeah, look at this drop. Just like bang, this is a 1 year chart. Bang, like huge. I mean, big moves in the cost of goods. And so I'm going to go to the positive side. You see a lot of, now this is the stock market's crashing, but if you, hearing from some people that are US manufacturers, they haven't been more excited. I was listening to a guy last night. He was talking about he produces beef. They're in Wyoming. They have beef. He's like, we can't sell to Australia. They just don't let us with all the regulations and rules. Now with these tariffs, we hope we can start exporting beef to Australia. We can't sell pork and other things to countries like China and other countries because of high tariffs. Canada with dairy products. And so you see a lot of US companies going, wow, this is awesome. You see Ford, GM, US car manufacturers going, thank goodness. We can, hopefully, if these negotiations go okay, we can now sell our products to the rest of the world. I think that's what Trump is getting at. Because he said it about 30 times in speeches. We don't have to guess. That's what he's told us he wants to do. So there are some bright spots going on right now across the board. So let me pull up, a few more chats here. Fortunately, the U.S. pays more in interest on its national debt than it does on the military budget today. Yeah, so Jeff, sorry, I didn't even mention this. That's one of the pieces of phase 2 here. We have roughly $6.8 trillion of short-term debt that needs to be refinanced this year of our 36 trillion. Okay. If we were the average rate of this debt's around 3.5%. Currently, if they refinance as of today, it's like what, 4.8, something like that percent. So that's a huge gap. If we don't lower rates, if Jerome Powell doesn't do this, we're going to have to pay the interest payments on this new 6.8 trillion is going to be so much higher. I think it's going to go up to $1.2 trillion per year just on interest payments. So if you're Trump, you're sitting here like, crap. Okay, we need Jerome Powell to lower rates now. And he's not listening to us, so we'll just force his hand. Eric, Trump needs to be careful not to play this too far. All it takes is for Europe to align with China that possesses a strong alliance countering for the U.S. So yes, this is the counter argument to this, which is actually a decent argument. Trump does all these tariffs and pushes all of our friends into the hands of China and other countries. It pushes that, like Europe, for you to use Europe. It pushes Europe to say, we're not going to trade with the U.S. anymore. That could be a case. However, when you look at geopolitics, it seems like if you're in Europe, do we really want to go be China's going to be our country and we're going to go use their currency and go to and you have the BRICS nations here that are all pretty discombobulated. They're not natural trading partners. They're really just together because they don't like the United States. And all of their currencies have been tanking over the last 2 years. So really, you want to use their currencies. The U.S. is the largest consumer on Earth. It might not be this way forever. We are the largest consumer on Earth. And so, you're in Europe and you're like, well, yeah, we could go somewhere else, but think about a business. Our largest customer on earth is telling us they want to negotiate. Fine. I think we're going to have to negotiate. I think you have to. The largest financial markets, largest just consumers on earth. That's why we're in such a strong negotiation piece from North America with Europe. I'm sure they would love to find someone else, but who are you going to go to? You're going to trade with Russia? No, we hate Russia. You're going to trade with China? No, we hate China. They're stealing all of our data. They have all the problems. All the stuff we hate about China. They also hate about China. They manipulate their currency. They go steal our intellectual property. Really? And so, what are your options here if you're Europe? That's kind of where I go. Rita, almost 7 trillion market cap wiped out from the US stock market. What do you see as a timeline for recovery? No short-term relief in sight. Only play as interest rate cut, but that won't help much either. So Rita, I go back to Monday. So 7 trillion wiped out of the stock market, right? Is what you put here. There was a tweet on Monday that said Trump would pause tariffs for 90 days. The stock market added $2.5 trillion in 7 minutes. I believe this is somewhat a manufactured crash. Everyone's flying to safety. You've seen gold sold off. It's kind of rallied a little bit, but gold sold off. Bonds have sold off. Bitcoin has sold off. So where's the money going? The money's going to cash. Everyone's going to cash right now. When you see a crash like this and they're not buying bonds, they're not buying gold, they're not buying Bitcoin, they're going to cash. So everyone's going to cash, meaning there's a lot of cash reserves and people want to generally buy the dip and be in the market once they have certainty. Markets like certainty. So once we know the rules of the game, which we don't know yet, this could be, Scott Bessent said this might take until June. It might take a few months to get to this. So we will see. Yeah, I know gold's up today. But like if you saw Friday and Monday, it sold off. Gold sold off. Why are people selling gold? Now I know it's come back a little bit and moves, but like in the moment, people sell everything. I believe though, assets like gold and Bitcoin, I think will do well here in the shorter term as people need some kind of store of value, some kind of safety. As we know more of the rules of the game, it'll give confidence back to the markets because it is somewhat of a manufactured crash. Trump obviously wants America to be, have this golden age of America. I think we might move there. Will we be in a technical recession? Probably. We might be in a recession here. Depends on who has more staying power. We might go into a short-term recession, which is 2 quarters of negative growth. That's what a recession is. We had one during Biden, and the White House said, well, it's not technically a recession. Remember that last year? We've already had one. We had one during COVID. We might be in one right now. Q1 of this year might have been right now Q2, and then Q3 could be a two-quarter recession. I don't think it'll go that long though. So anyways, yeah. Now, the other argument is the world hates us. Canadians are pissed off right now. Yes, they are. I believe everyone's pissed off at us. Everyone hates the US for sure. I have family in Canada. They're all like, screw you guys. Like, we still love you, but like, screw your government. And I'm like, I know. But I think if you're in Trump's shoes, I'm playing out. And I think he's okay with that. You've been screwing this is his commentary. Again, I'm defending a position. His position is you've been screwing us for 40 years. We're going to rebalance trade. We're going to force your governments to lower tariffs and or reset kind of a new economic world order. We're the biggest customers on earth, and the customer's always right. So if you want us as a customer, which we're your biggest customers, then let's play ball. I think that's the space they're in. Furthermore, if we really break China and then show the rest of the countries in 3 or 4 months, oh shoot, look what we did to China. We've renegotiated your trade. What's made your life better to negotiate with China and everybody else? It actually has made better trading partners around the world for everybody. I think they'll come back pretty quick. I think Trump's okay with people being mad at him. According to Peter Zeihan, China is nothing in 10 years. Yeah, their demographics. So if you read Peter Zeihan, he's like, China is going to collapse in the next decade. That's what he thinks. He spoke at our last night, and he's got a pretty good argument for this. This might be the tipping point. If you look back again, don't think about the day-to-day and how Europeans feel about Americans. Like, who cares about what people feel about? The bigger picture is perhaps on these 3 economic wars, Trump's sitting here like, okay, we can renegotiate trade with other countries. We can get our rates lower, and we can crack China. We can break their economy. This looming threat that steals our stuff, is putting military stuff, trying to take Taiwan and just causing problems around the world. Again, from the US's view, We have an opportunity right now. They have bad demographics. COVID hurt them like crazy. They were closed for 3 years during COVID. And so a lot of countries moved their manufacturing to other places, Vietnam, Indonesia. We have a window here. And you put Scott Bessent, one of the top guys ever to do this, and you say, Scott, go crack the Chinese economy. It might take 3 months, might take 5 months. But if you really reset the world order, in the medium to long term, that might be the most beneficial thing you could do to Canada and Europe. And actually, the new China, and the people of China are amazing. I'm just saying the Chinese government, reset the Chinese government to a, hey, join us, be a trading partner with us. Let us work with you. Let Facebook and YouTube and Google be in China. We'll let your products be with us, and we'll actually be true trading partners. There's not this wall of the communist China that no one can do business in there, but we can just do business with you. No one's been able to stand up China. I'm playing scenarios here, but that could be what's going on here from the media long term. And then all of a sudden, a mad Canadian, like my cousins who are Canadians, they might go, oh, shoot, man, Trump is actually pretty smart. All of a sudden is now they can trade with 1 billion people in China and another 1 billion people in India that are somewhat closed off as trading partners to us. Oh, shoot, we can now do business with them, and we actually export our IP. We have IP protection laws, and actually we can work as a society there. I don't know. It's interesting. Again, let me just share. I'm a dude in freaking Salt Lake City, Utah. I don't really know. I am running scenarios of where this could play out based on all the information I have that I just presented to you. I don't really know. Could it be Europe and Canada hate us? They find different trading partners. They move on. Yes, that could happen. I think the probability, though, is small. I think the probability is much higher that we renegotiate, we set kind of a new world order of trade, and that's more beneficial for the U.S. manufacturer and the U.S. things. Scott, as a Canadian, I'm more pissed off with our own government. Okay, this is something interesting. You guys ready? Sorry. Hopefully this is somewhat interesting to y'all. The first order effects is obviously the trade. And everyone's like, oh, the stock market's down over the last 5 days. That's the first, and people are, Trump should be impeached. Like, there's just like, people react to the first order effects. Think about the second and tertiary effects of this. And I mentioned a few here. Jerome Powell cutting rates, China. Another one that's interesting here on number 1, economic war. You are forcing external governments. Okay, get this. You are putting, because a lot of these guys, if you've ever been to in the US, we don't really have this, but VAT tax. Have you ever had a VAT tax before? I lived in Taiwan for 2 years. My wife lived in Portugal for 18 months. I've a lot of family in Canada. They have a lot of VAT tax. They have import fees. The governments of most of the world tax their citizens like crazy. What Trump is forcing governments to do right now, he is forcing their hand to be smaller. He is forcing their hand to take away VAT tax. He's forcing their hand to lower taxes for their citizens in some cases. Isn't that interesting? As a secondary and tertiary effect, he might force Canada to lower taxes for their citizens, or Spain or Portugal or France, and to actually be a more conservative government. Isn't that so interesting? I was like, wow, that might be a second or tertiary effect of what's happening right now, because they also are going to have to rebalance how their government, it might force a type of DOGE, Department of Government Efficiency in all these countries. They're going to have to go, well, we're spending too much money. We've got to go and actually cut our own budget because we can't make as much money on taxes anymore in VAT. We've got to, we've got to figure out how to cut spending as well. We'll follow the US model. Could happen. Interesting secondary and tertiary effect. We'll see. But if you back up a little bit, you see the 3-month, the 6-month time window we are in. And you go, these are somewhat brilliant people that are running this. Here's some effects that we already know as of right now. And next week or the weeks after, we might see there might be more effects that I haven't written on this screen yet. There's a chance we really, really renegotiate and set a new world order of trade. I keep using the term new world order. Okay. What I mean by this, I'm going to share, obviously a lot of you have read Ray Dalio's stuff. Talks about 80-year cycles, right? Of dollars and things like this. And if you guys haven't heard this before, this Ray Dalio actually built upon a book. The older book is called The Fourth Turning. This book is fascinating. If you haven't read this book, I would highly recommend going and reading this book. It came out in 1995. Almost all of their predictions have come true so far. Ray Dalio built a lot of his 80-year cycle, I believe, on the fourth turning. What the fourth turning talks about is this concept. The concept is thus, that we generally fall into 80-year cycles as humans. Human psychology is an 80-year cycle. So if you go back 80 years, we had World War II, okay, was roughly from today, about 80 years ago. If you go back 80 years before that, we're just going to talk the United States for a second. Do you guys know what happened 80 years before World War II? The Civil War. Do you know what happened roughly 80 years before that? The Revolutionary War. Okay, these are all 80-year chunks. This is just the United States. If you look back through history, you see many societies follow this 80 to 100-year time frame. And the rationale is for this. In these 80 years, so I'll go right here. You have what he calls 4 distinct generations in these 80 years. And here are our little spots. Okay, 80-year generations. And I'm giving the really Cliff Notes version of this it's called the fourth turning. This generation that is right after the war, during the war, they are called, if I remember correctly, the prophet generation or the greatest generation. That's what we called them here, the greatest generation. Remember this generation? They fought in World War II, all this kind of stuff. The prophet generation. They know how bad war is. And then they build an amazing world after this war. And they know how bad war is. And so they don't go to war again. They raise the next generation is called, oh man, I forgot the name of it. The third one is kind of this is kind of I forgot the name of it, but the kind of the hippie generation. And then there's another generation, and this would be like the current, Gen Z millennials right here. Now, what's interesting is the Gen Z millennials currently, and if I go to this 80-year cycle, will be, and actually Gen Z, Gen Alpha more, Gen Z and Gen Alpha, which is kind of the kids, right now, they will be the next prophet generation. Typically in these cycles, in the third turning, you see a big financial crash. You had the Great Depression here. We had the Great Financial Crash here in our cycle. This is what they predicted this back in 1995. They said between 2005 and 2012, 2015, we're going to see a huge financial crash. That's what they predicted. They were correct. A once in a century financial crash. Then they said in the 2020s to 2030s, at the end of this fourth turning, what happens is there is generally major world conflict. And then the winners of that major world conflict build a new world order with new rules of how things are going to function. And then it now starts off the next 80-year cycle. Okay. Ray Dalio talks about this in his book. I was just with Tony Robbins a few weeks ago. Guess what he talked about? All of this. This is what like his whole message to us with this. Where do we go? We're right here. Okay. This is like his whole message. We are in this right now. Major world conflict to a new world order. Now, in Dalio's book, he always talks about how currency changes. And in his book, he mentions that you have China, this rising superpower that kind of takes, thank you, nomad, hero, and artist. Thank you so much. Someone just dropped that in the chat. Prophet, and then it's nomad, hero. This would be nomad, hero, and then artist generation. And then it repeats the cycle. This is the same cycle as, what do they call it? Strong people make easy times. Easy times make weak people make hard times make strong people. You've ever heard that quote before? That's exactly this cycle right here. It happens generally in 80-year chunks because the new artist generation here, we don't really know what it was like to live through World War II or a Great Depression. We've kind of forgotten. Those people aren't really around right now to tell us the effects of a world war or a Great Depression. Does that make sense? And that there's psychological changes of all these. It's very interesting on this book. So anyway, sorry, back to this. Major world conflict too. And then Dalio talks about how currency has changed every 80 years as well. Now, in Dalio's book, he believes he kind of alludes to that China would be this rising superpower, and we would maybe go to a China dominated system, which could happen. But what's recently interesting, Ray Dalio's done a lot of speeches recently, and he has kind of taken this out. He's kind of saying, he's like, I don't, and he's indirectly saying this, but what I pick up is, he's like, yes, China's rising third, but I don't think they're the next currency. He alludes to two things. He says either the US reinvents itself, right? The US, maybe what Trump is doing right now is reinventing this new world order of trade around the globe for another 80 years, perhaps. And maybe there's no maybe there's no World War III. We just have, economic war, which can happen, has happened in some cycles, major upheaval, governments get, toppled and collapsed, but there's not like a world war. Or he actually points to maybe we move to a cryptocurrency type of scenario as this new world order of currency. That's what Ray Dalio is currently putting out there right now. He believes he's actually been more and more pertinent on Bitcoin as potentially this new world order. Now, we don't know, and we haven't lived through the full 2020s, and this could go to maybe 2035 at the end. But the earliest would be the 2020s through the 2030s would kind of be this time frame as a new world order. Isn't that so interesting? So back to these cycles again. I don't know. I'm just sharing info with you. Could Trump be resetting a new world order right now? Could he be saying we're going to topple China, we're going to reset trade around the globe, and we're going to set up the United States with, Scott Bessent today just made a speech about the use of stable coins and cryptocurrency, about how he wants to start using this. He's the Secretary of the Treasury, to make a new world order for going forward for the next 80 years and how we're going to operate as a globe. To do that, we would, the US or China, the two major players, one of them would have to fall. And I think what Trump is saying right now, we're in a strong position. China's in a relatively weak position. Let's put on the icing and actually really reset this new world order. That's kind of where I'm getting at when I say new world order. Is this interesting to anybody? I don't know. Hopefully it's interesting to y'all. You can hear how my brain thinks a little bit. Let's read some of these. The problem is China does not play fair. Supposedly they are allowing their manufacturers to produce American patent products with no penalty, which could hurt U.S. manufacturing. 100%. That's what we just talked about. I mean, they really don't play by the rules. Our economy, Scott Bessent, is there to clean up on the U.S. downfall of cash, which is over leveraged with debt from our Fed. The real goal is the crash. The U.S. and world currency all goes to crypto. Perhaps. Yeah, perhaps. You seem optimistic about the three wars you described Trump as waging. When gambling, you may not want to only look at what you think is most likely outcome, but also what is the worst risk, even if they're not likely. What do you imagine could be the worst pessimistic scenario, even if unlikely? Well, worst scenario, if we're going worst case scenario on this whole trade thing is governments all band together. The whole world goes against the United States, says we're going to trade without you. We're going to find new trading partners. We're going to isolate the United States. That would be, a bad scenario. They then say we're getting off the dollar. We're leaving the dollar, and the $36 trillion of debt. Well, you can just have that, I guess, or we're going to take the loss on that $36 trillion debt, and they really move off the U.S. system. I believe that's very unlikely. Number one, because of $36 trillion of debt, like I just mentioned. Number two, we are the consumer of the globe. Really, the world wants to miss out on $20 trillion of consumed goods. 20 trillion that we consume a year. Unlikely. I think it's very unlikely. And I think Trump knows that, and Bessent knows that. And he goes, they have no choice but to accept a trade deal with us because we consume everything. They hold our debt and they hold our currency. And we, by the way, have the largest military on earth by tenfold. Tenfold. So really, if you really want to play that game, if you really want to go down that route, well, guess what? One aircraft carrier, one of our 11 aircraft carriers, I love saying this quote, would be the third most powerful air force on earth by itself, one aircraft carrier. Number one is the U.S. Air Force. Number two is China's Air Force. Number three would be one aircraft carrier from the United States. Okay. We have 11 super carriers that are powered by 2 nuclear power plants. They can go for like 100 years. I mean, it's not even close. So really, and all these countries are fractured. It's not like they're all together. The EU can't agree on one thing. They all argue. They all are back and forth. There's no cohesiveness. And it puts them in a tough spot. I think they know this, and they know the hand we have. and Trump investing it and letting it go, yeah, it might hurt our stock market for a couple weeks or a month or two. So be it. If it means we get to drop rates, if we get to bring manufacturing back to the United States, if we get to renegotiate trade deals, and if we get to crack China's economy, yeah, it's worth the stock market going down for a couple weeks, because guess what? All that money is going to the sidelines. And guess what happened? When they have confidence, guess the market will rage back. All that money on the sidelines, it's got to find a home somewhere. It's got to come back. Now, it might take 6 months. Okay. For guys like me, I'm in crypto. Maybe it'll flow to crypto. Maybe it'll flow to gold as well a little bit because of the fracturedness. But anyways, that's what I'd say the worst case scenario is. But I just think it's not. I think it's very low probability. Zach, he wants low interest rates. I agree with that. Trying to make the U.S. a producer versus consumer, independent. Atlas shrugged, 100%. His legacy. Yes, and by the way, we're forgetting Trump's whole ego and legacy depends on markets and everyone making money. If you love him or hate him, the guy has a huge ego. His ego depends on this working and making America the golden age of America. If you had a 4-year plan, this is what you would do. And you would do this in the first quarter of the 4 years. Q1, you would secure the border, you would set up new trade deals, and you'd have to move quickly. I agree. He could have done it more tactfully. They could have rolled it out in better means, but they don't have time. They have a 4-year window and maybe even a 2-year window before the midterms. They really have a 2-year window. You have to do this, and you have to do it sharp and fast. You have to send in Doge to cut $1 trillion of spend fast. You've got to send in Lutnick and Scott with a strong negotiation hand, and you got to just move. And you would do that in your first quarter of your presidency, maybe go into your second quarter, so that you can unlock the next, 2 to 4 years of productivity in the country. I think it's somewhat brilliant. Now, is it perfect? No, not at all. Is there a lot of bad effects that come from this? Yes. But when I think of a macro perspective of where the negotiation hand is at, I think it's brilliant, and I think it'll work out very well. If our debt is part of a leverage for other countries to use the dollar, why is our goal to pay it all off? Or is it the goal to just get our debt into a controllable position? Yeah, I agree. And Eric made a good comment here. I don't think the goal is to pay it off. I think directionally though, great. You can say that we're gonna try to pay off our debt. And maybe it is, who knows? But I would say a manageable position is yes. If they could pay off a third of it, awesome. You do want debt held by other countries for your currency's sake. I've made that argument before. I'll keep making that argument. But 36, 37 trillion is pretty high. Our interest payments are pretty darn high. We got to parse that down. It's like a company. I think the best, if I remember correctly, back in school, 10% is the healthy amount of debt that a business should have. Now, some businesses have 20, 30% debt. Some have, but if you're at like 1% debt, you're kind of under leveraged a little bit. You should have around 10%. Someone on Wall Street tell you, hey, you're a little under leveraged there. So, all right, there's my crazy stuff from today. We have an article going out on this that I'm kind of publishing my thoughts. Again, we are getting new info every day, which is interesting. The 10-year treasury, 30-year treasury today. We are seeing China sell off. I wish I was talking to my wife last night. I was like, man, if I had a genie in a bottle, like Wish, I'm like, I live a great life. I don't know if I'd wish for people like I win the lottery. I think a fun wish would be if I could just be in the room and listen to all these negotiations. I could listen to Jamie Dimon and really know what's going on though on the insiders. What's Larry Fink talking about right now? What's Jerome Powell saying right now? To be like this, like a little ghost that I could float through and learn all that stuff. That would be so interesting. Would you guys like me? I have time here. I can share investor relations during this time period and how we've dealt with that with investor relations. Would that be useful to y'all? Or we can cut the meeting too. Keep going. Yes, please. All right. We'll keep going. You guys are welcome to hop off or not. So Bridger Payton, I run 2 funds. We have a Fund Launch Partners, which we just closed a $30 million raise, which was awesome. We're so excited. We're actually speeding up our timeline. We want to do 12 to 20 deals into Black Card members this year, by the way, which is pretty fun. And then I've got Ugly Unicorn. I'm going to talk about Ugly Unicorn because it's a public business. Right now, an investor every day can see the price of the crypto market, which has been horrendous. Okay. I mean, it's been, look at this, 20% down on Ethereum in 7 days. I mean, the crypto market has been just horrendous. We have not been immune to this as well. Furthermore, we send out reports every 2 weeks to our investors. which sometimes is good when the market's going up and sometimes is bad. Right now it's bad because market's falling. And so they get a report every 2 weeks. And so we have had a number of investors, hey, Bridger, what's going on? What's happening? And I go, oh, have you seen the market? Have you been online? And actually most of the time. So it's interesting. And now we have about 100 investors now Unicorn. I've had 4 or 5 upset about where we're at in the market. And usually, so if they send me a message, hey, what's going on? Or they're upset with their return, which we're definitely negative this year. It's been probably our worst quarter ever as a fund. But I go, okay, have you guys seen the market? Let's hop on a call. I'm a guy that talks on the phone. So I always hop on a call and I go, well, let me just show you real quick. Do I have the chart here? This year so far, well, I don't have it in front of me. This year, Ethereum is down. That's all time, but I think this year it's down 55% this year. And our fund's doing better than that. So I'm like, hey, we're beating Ethereum. Bitcoin's down 20 something percent from the year. I think it's 22% for the year. We're closer to that. And then XRP's down. I mean, they're down. There's huge amounts. These funds are down 51% from its all-time high. So you're like, hey, we're actually doing pretty good compared to the market. It's like, oh, okay. That's where the market's at. But furthermore, I really like, let's make sure my computer doesn't die here. I like to be pretty transparent with my investors. So I tell them, hey, this is what we're thinking, this is what we're doing, this is what we're positioned, and this is where we're going to the medium to long term. And then I talk them through. Now, depending on the investor, I ask them, well, what do you think is going on? And most of the time, they don't really have a grasp of what's going on. And I will walk them through a little bit of kind of like what I shared with you guys just barely, of where I think the market's at. And let's look at the secondary, tertiary effects of the bond market, the stock market, the crypto market. And I walk them through macroeconomics of where we think things are moving. And it shows a really high level of expertise on an asset class. And what happens is they go, oh, shoot, Bridger and Dan are pretty sharp. I thought, like, yes, the market's down, the fund's down, but oh, dang, like they at least know what they're talking about. We published this report April 7th on, what's going on. You'll see a mix in here. And by the way, I'll kind of read pieces of this report here in a second. I would suggest all of you should do this. Whether you have investors or not, you should write up a quarterly report. The quarter just ended. You still have time. We did this April 7th. You can do April 9th. Do it today. Write up your thoughts on the market. And not just, maybe it's not general market, but your market. You're in the real estate market. You're in the whatever market. Write up where you believe the market is moving. In here, I don't talk about really our positions in our fund at all. This is more a broad market letter to investors, okay? Short-term volatility does not deter us from where we believe our medium to long-term vision is for this fund in crypto. Tariffs and volatility are big headlines for this quarter as Trump puts pressure on other countries to negotiate trade deals. We see a couple of outcomes listed below. We are still very bullish on where crypto is headed, and recent volatility has created unique buying opportunities in the market. Furthermore, there are no tariffs on most cryptocurrencies, which makes a strong case for many nations to start adopting crypto and or blockchain-based solutions. I added this chart. It's kind of small, but you could zoom in. You see performance. Ethereum since January 1st to March 31st, negative 45%, negative 11, negative. You see how much the market has moved and fallen. And I just added this as a visual. This is kind of where we believe, because crypto is such a volatile asset. Here's, some example of Bitcoin drops and then the gains that happen after those drops. And what we're trying to show here is like, hey, crypto is volatile, but stay in the game. Okay. We use Bitcoin as a proxy here. And then I just, because I'm curious about it, I go potential outcomes for tariff and trade war. Outcome number one, countries capitulate and lower their tariffs. We talked about this. Countries retaliate with their own tariffs. And countries finding other trading partners. That's what I talk about here. Of the 3 options, we believe option 1 is most probable. Second and third order effects from tariffs. Most business and nations adopt cryptocurrency and gold to transact and store value. People get off sometimes the dollar. The 10-year treasury dropped to 3.9 over the weekend. Now it's actually risen. But this puts, the Fed to cut rates. Oil and gas prices lower. Hinder or destroys China economy. We just talked about that. And then I go through, here's some bullish news though. This is still what's going on. 22 states have proposed bills. President Trump announced strategic stockpile reserve. Russia and China are both rumored to be working on Bitcoin strategic reserves. New SEC chair, proposal for a strategic Bitcoin reserve, and zero tax on cryptocurrency. These are all huge bullish measures. So and I kind of zoom out, don't forget the long term of where we're at. This is a chart you could use on where we're kind of at. These dips are usual for crypto. We are entering the last year of this 4-year cycle in crypto. We've already planned many X positions for our fund. We plan to roll these in. You can message Bridger if you want to add more to your positions. Okay. Not too complex. All of you could write up something like that on your market. We publish this to our investors, and furthermore, it is somewhat of a stockpile of for future investors to see how we think. I have done this. If you go to uglyunicorn.com, you can see investor reports. You can go see all of my reports. I think most of them are here. You can see 2022, 2023 reports. You can come in. This is what Bridger was thinking in what date was this? I should date these. Shoot, I gotta date these. I think it had it here though. This was the Q2 report of 2023. Okay. Debt ceiling, central banks, digital currency, Bitcoin halvings coming up. It's kind of what we're talking about. You can kind of see where we're at. And I think it's a good practice. This is what we put in for our January outlook for 2025. You can kind of come read some of my reports. Some of it's got visual, some of it doesn't. Some people are more visual people. Some people are more, if I go to my 20, you can see kind of my old reports. I think we're pretty crappy. Let's see. I definitely gotten better at some of these, but I think it's a good practice to go and actually write reports for your investors, or potential investors. You can use some chat GPT to help you, but like that whole thing, I wrote that myself. I use chat for a little bit of data research, but I write the report myself. It can be 1 page, it can be 10 pages. You can go read, Warren Buffett puts out letters, Jamie Dimon puts out letters. You can go read their investor letters. The best people in finance do this. I think you should do it as well. I published mine on LinkedIn. I published snippets of it as tweets of where I think the market is at. It helps organize your thoughts and establish you as somewhat of a thought leader in a space. I think it's something worthwhile doing, and I would push you guys to do it. Any questions on investor reporting, that kind of stuff? Furthermore, my fund is open-ended, so people can leave my fund whenever they want. They just give me a notice, and the next 90 days quarter mark, they can pull their money out. So we have people that are always, should I pull my money? And I go, hey, it's up to you. Crypto's not for everybody. So if you want to, if volatility is going to scare you out and you're stressed out about this, you probably have too much money in the fund. You probably should get you out. And they're like, oh. And then it's kind of like reverse psychology. Wait, hold on. And I go, well, me and Dan both have, around $1 million each in the fund. Like, we are committed to this thing. We're all in. Volatility doesn't scare us. We've been in this game. Dan's been in this game since 2013. I've been in this game since 2017. Crypto goes up and down. We believe the destination is clear. We have tons of bullish news. If some short-term volatility scares you and wants to get out, that's totally fine. You're welcome to get out of the fund. Just let us know what you want to do.